We got some renewed hopes of a stimulus deal that may be pushing markets higher. At least that's what happened yesterday. I want to get some ideas for your portfolio. Gene Todd, Executive Vice President of Fiduciary Trust Company, joining us right now, along with Liz Young, Director of Market Strategy at BNY Mellon Investment Management. She's also a CNBC contributor. Gene, let me start with you in terms of just positioning yourself. Are you positioning for a stimulus bill? I mean, do you think this is really happening?
Hey, Andrew, good morning. Yeah, we do think it's happening. Now, I can't tell you it's going to happen before the election, although it seems like they're getting closer. They weren't that far away from the beginning. You had the Dems at 2.2, calling for 2.2 trillion in stimulus, and Mnuchin and the Republicans were at 1.6, 1.7. So as we like to say, the art of the deal, we think it's going to get done. But it's not the end of the world if it does not get done before the elections. If it doesn't, it'll happen shortly thereafter.
Liz, how are you playing this in terms of equities versus, I mean, look at what's happening in the bond market right now. Look at what's happened to the 10-year. Does that say anything, or is that speaking to you right now?
It's absolutely speaking to me. And if you just compare it to what happened in September, we saw a rough September in the equity market, but the bond market really kind of stayed steady. What we're seeing now and what we saw yesterday, and obviously one day does not make a trend, but what we're seeing now is you saw a nice rally in the stock market. You're seeing a lift in yields. You're seeing risk appetite broadly staying healthy. And I think that should continue as the recovery drags on. Now, there's a caveat that with the expectation of an opposing party win, the market is typically weak in September and in October. So I wouldn't be surprised to see a weak October here, but it doesn't mean the recovery is off track. And I think some of the signs like yesterday are encouraging.
Liz, do you think the market's pricing in a Biden win right now?
I think the market right now is reacting to the likelihood, the higher likelihood of getting a stimulus package. September, we weren't really expecting one at all. We unfortunately needed some bad news to get the likelihood to increase a little bit. I don't think the market is pricing in entirely a Democratic sweep. I think what the market is reacting to as of the weekend and then yesterday is less political uncertainty, given what we went through last week and the president contracting COVID and so on and so forth. So I think that if Biden stays ahead in the polls as we move through October, we're likely to see more volatility. The congressional race still continues to be a little bit of a toss-up. If the likelihood of a Democratic sweep increases as we move through October, we're going to see more weakness as well.
And Gene, are you in the same place?
Yeah, I mean, I know the consensus is that Biden is going to win. And I guess people are saying that a blue sweep probably is the dominant probability at the moment. But sometimes the consensus is wrong. It was wrong during the last election. I'm calling into the show from St. Louis right now. And so, there's a lot of people here who, let's just say, polls aren't accurately reflecting how they're going to vote. We know the Wall Street Journal had a recent poll that said Biden was up 14%. It's obviously much tighter in swing states, maybe 5%. So a lot can happen. The elections are 4 weeks away. That's an eternity in terms of an election. So let's see what happens with the economy. Let's see what happens with the markets. Let's see what happens with reopenings. But I think it's going to be a lot closer than the polls suggest. And we're just going to have to wait and see.
Shepard Smith here. Thanks for watching CNBC on YouTube.